US dollar sank to a 11-week low due to the spike up in the US unemployment rate to a 4-year high. The mixed performance in the major US stock indices, where we start to see a mean reversion rebound in the Nasdaq 100 that managed to record a positive gain against a sea of red in the other 3 major US stock indices. And West Texas crude oil sank to a 4-year low on the backdrop of ongoing optimism between this Russia and Ukraine potential end of a 4-year plus of war. Very good morning to all. I'm Kelvin here, Senior Market Analyst from OANDA. Welcome to today's Daily Dose of Market Insights. Today will be 17th of December 2025. So as usual, before we kickstart our gist of the Daily Dose, let's have a quick look at the disclaimer first. All right. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so before we jump into a quick review of the intraday technical outlook on all the broad-based cross-asset classes, let's have a quick recap what has taken shape yesterday. So what we could see yesterday over here was the release of this non-farm payroll data and as well as the unemployment rate, followed by the leading tier 1 economic data, which is the manufacturing PMI data and the services PMI data compiled by S&P Global for the US economy. So let me draw out the calendar for you guys to take a look. All right, over here. So going towards the economic calendar, so what we could see over here is that let's start with the non-farm payroll data. So non-farm payroll data was a bit erratic. Why? Because due to the government shutdown that has taken shape around 2 months ago. So what we could see over here is that we have 2 simultaneous release of the October print and the November print. So the October print showed a tremendous decline of negative 105K jobs loss. Don't forget that that's also include government employees over here. And when the shutdown ended, we see a reversal of the loss to a positive print of 64K. So that is slightly above 50K market expectation. But however, what's interesting over here, or what's not so optimistic, was the unemployment rate. So the unemployment rate rose to a high not seen since September 2021. So market is expecting a constant rate of 4.4% that has been in place since October. And right now, the November rate spiked up to 4.6. So if you look at the November rate over here, the US unemployment rate, so what I could see over here is that there's a gradual increase and there's a significant jump in November to 4.6. And this 4.6 is the highest since September 2021. So that's close to about a 4-year high over here. So indicating that the labor market in the US continues to be sluggish. All right. And also on top of that, if you look at the PMI data for the preliminary fresh PMI data, and given that PMI data is considered as a leading economic indicator, the services PMI, which is much more significant to the US market, given the fact that 3/4 of US economic growth are dependent on services activity. So the services PMI consists of a slew of survey questions that are being posted to the relevant managers of the services company that are operating within the services industry in the US. So the headline figure is still showing expansion at 50. Anything above 50 for PMI numbers that's showing expansion, but the rate of expansion has starts to slow down. So previously it was at 54.1. Market is expecting only almost unchanged at 54, but it dipped down below expectation at 52.9. So at 52.9 is the lowest expansion rate in since June 2025. So that's about close to a 4-month low. So I could see over here since July spike of 55 around 55.5. Excuse me, the rate of expansion has starts to gradually decline for the S&P Global US Services PMI preliminary figure for December. So in a nutshell, what we could see over here is a sluggish US labor market coupled with this leading economic indicator, which is the S&P Global US Flash preliminary figure for the services PMI, for December has started to slow down in terms of its pace of expansion. Net overall, it could still allow the Fed to be justified to cutting rates next year. So the next question, the next question for market participant is the pace of that interest rate cut. All right. So if you look at the CME Fed Watch 2 over here, market participants are still not expecting the Fed to do the fourth cut in the next meeting in January, which is 20th of January 2026. Over here, let me expand my screen. Right, so still hovering at a high chance of the Fed being stamped at 74.5% odds to maintain at 3.5% to 3.75%. And if you look at the aggregated tab, market participants are still expecting the Fed to at least cut 2 times in 2026. So the first cut in 2026 will likely come in 18th of March, all right, 2026, which is a rather not so high, but still above 50% at 63% chance. And the higher odds will be at 84% and on the 29th of April 2026 meeting. And then thereafter, we have another cut for 2026. So that will be all in all, that will be the 5th cut since the Fed start its current interest rate cut cycle in Q3 this year. So the next cut will be on the 29th of July 2026 FOMC meeting with a chance of 69%. Then thereafter, the market expecting to stamp at. So by the end of 2026, on the 9th of December 2026 meeting, market participants expecting the Fed to have a higher odds for the rate to be at 3% to 3.25%. So that actually indicate at least 2 interest rate cut for 2026 of 25 basis point each. So the Dow hasn't really changed much as compared to before the release of the non-farm payroll data and as well as the release of the preliminary S&P 500 global services PMI data flash figure for December for the US economy. But the markets has reacted accordingly, especially the FX market. So if you look at the FX market over here by looking at the state of the US dollar, so the US dollar managed to actually slide down within our expectation. So still recall that I do mention that since the last 6 months or so on 1st of July, it has been trading in a complex sideways range configuration, hit the upper boundary of the sideways range configuration on the 21st of November with bearish exhaustion candlestick before shaping that slide. And right now, it has really hit the middle point of this sideways range, but still remaining below the 50-day, the 20-day, and the 200-day moving average since the bearish breakdown of the 50-day moving average on the 3rd of December, which is the start of this month. So what you could see over here is that it hit our support level, which is the middle part of the range at 98.03 and form a bullish hammer candlestick. All right, I could see over here, there's a bullish hammer candlestick. So all in all, what it means that today there will be another risk event. Later I'll show you what are the risk events to look out for today. There could be some kind of mean reversion bounce to actually retest back around the 98.66 / 99.25 level, which is also the 20-day, 50-day at the intersection of the 200-day moving average. And you notice that in the last we call it 5 trading day or 6 trading days since the black bearish Marabuzu daily candlestick that was printed on the 10th of December, there's a steep decline, leaving a lot of white spaces at the top for a potential mean reversion snapback scenario from a technical analysis perspective. And given there's a bounce of this we call it the middle portion of this major sideways range configuration, pardon me, at 98.03, and also form a bullish daily hammer candlestick at the end of the US session that's justified this potential minor mean reversion rebound within this ongoing slide that could still potentially hit the lower limit of this major sideways range configuration at 96.20, followed by the key major range support at 96.4. All right, so that's for the situation in the FX market. Now, let's take a look at the US stock market. So the US stock market was rather lackluster yesterday. So what we could see over here is that we do have some bargain, we call it bargain hunting activities that has taken shape within the mega cap technology space that are also part of this AI optimism, AI fear bubble narrative that has been switching to and from in the last 2 months. So Nasdaq 100 managed to see a bit of bargain hunting. That is the sole positive gain and outperformance yesterday, up 0.26%. The S&P 500 also managed to trade higher once it hit the 2 a.m. mark Singapore time, where it did a rebound as well. So the underperformer were the Dow Jones Industrial Average, which is down by negative 0.62%, where it also managed to trade off the session low that was registered at 2 a.m. towards the last 3 hours of the US session yesterday. Similar for the Russell 2000 as well, which is down by negative 0.545%. They also managed to trade higher from the session low at 2 a.m. yesterday, Singapore, at 2 a.m. today, Singapore time, pardon me. All right. So that sum up the interesting events that has taken shape yesterday. So what we could see is that oil prices, plummeted by 2.5% due to this ongoing potential high chance that the US may provide security guarantee to Ukraine, very similar to being a NATO membership, but you know that the sticky situation of why this peace deal is not able to fulfill because Ukraine wanted to become a NATO member, but that is a no-no for Russia. So what the US negotiator did is that they offer Ukraine a kind of security guarantee that is pretty much equivalent to be a NATO member, but not being an official NATO member. And right now, this potential security guarantee as offered by the US White House administration is now being put to a vote in Congress, okay, as a part of the deal to end Russia war. And in reaction to that, Russia Deputy Foreign Minister, he said that he's very much confident that the war is nearing an end. So that sends oil prices tumbling down, hitting the 55 psychological level. So that is close to a 4-year low. All right, due to the fact that if this war ends, there will be a removal of sanctions on official Russia oil supply that is able to flood to the rest of the world. And given the fact that the rest of the world is still showing a glut in the oil market, so that actually potentially saw a downside spiral in oil price. But in today's Asia session, very interestingly, and also from a technical perspective, now I share that it hit our support level yesterday, which we mentioned, and staged a bounce in today's Asia session after on this news flow stating that Trump orders some blockage of tankers off Venezuela. So due to this pressure on this Venezuela situation, whereas Venezuela is also an oil producer, so Trump has decided to block off tankers off Venezuela, squeezing kind of a supply, short-term supply crunch within the US coastal area. So that causes oil prices to bounce up at 1.5% as we are speaking. So later I'll share with you guys what are the new trend buyers for West Texas crude oil on the intraday basis for today, given the latest development in the oil market, which I share with you guys. All right. So now let us now proceed to the intraday technical outlook on all the major cross asset classes. So with that, let me expand my screen. Right, good. So let's start with the FX market. Okay, starting with the euro dollar. So the euro dollar spike up, all right, as expected. Okay, give me a minute. Hopefully the screen is up. Okay, it should be fine. Great, I think the screen is good. Okay, so the euro dollar spike up, hit our resistance level at 117.90 before trading downwards. All right, so right now what we could see over here is that it already hit the upper boundary of this minor ascending channel that I've drawn from the low of 21st of November 2025. So all in all, it's still trading within a short-term uptrend phase within this minor ascending channel, and as well as holding above the 20-day and the 50-day moving average. But we know that prices don't go vertical up and vertical down, they oscillate. So right now there is actually a risk or an increased risk of a downside oscillation, or what I call that a minor mean reversion decline within this short-term uptrend phase of the euro dollar to retest the lower boundary of this minor ascending channel. And that also being supported by the bearish breakdown of a parallel ascending trend line support on the hourly RSI, and the RSI hasn't hit the oversold level yet after the bearish breakdown as we are speaking right now at 11:18 a.m. Singapore time. So all in all, I will flip to a bearish bias for today ahead of today's key risk event, which is ECB monetary policy decision. Later I'll share with you guys what are the timing to watch out for. Pivotal resistance level will be at 117.90, 118 figure level, taking into account yesterday's exact minor swing high. before the pivotal resistance level, first intermediate resistance level to watch in any potential minor bounce at 117.60. A breakdown below this key near-term support level at 1720 may see a higher probability of this mean reversion decline scenario unfolding towards the next intermediate support zone at 116.80/116.55, which confluence with the lower boundary of this minor ascending channel drawn from the low of 21st of November. Only a bullish breakout and an hourly close above 118 figure level will invalidate today's minor mean reversion scenario to reinstate the bullish impulsive upmove sequence for the euro dollar to see higher high for the next intermediate resistance to come in at 118.20 followed by 118.60. We also confluence with the minor swing high area of 17th of September. Okay, so that's for the euro dollar, flipping to a bearish bias for today for a potential mean reversion rebound towards for a potential mean reversion decline, towards the ascending channel support. Next up will be the sterling dollar. So given the technical weakness that is being seen on the sterling dollar, given the technical weakness that's being seen on the euro dollar, for the sterling dollar over here, I will be not so bullish to continue my bullish bias, given the fact that yesterday it hit our resistance level at 134.50 and just start to trade sideways. So there could be a potential chance that the sterling dollar may start to trade in a sideways range for today. So I'll flip to a neutrality stance for now, given the weakness on the euro dollar as per se. So neutral between 134.50 and 133.50. 134.50 upper limit and lower limit will be the 133.50, which was our short-term pivotal support level yesterday, and as well as a confluence with the 200-day moving average. So that's for the sterling dollar. Onward next will be the Asia Pacific currencies, starting with the Aussie dollar. So the Aussie dollar also managed to survive at the short-term pivotal support level. Yesterday it spiked up during the start of the US session and hit our first intermediate resistance level / upside trigger level, but it can't break out at 166.60 before upside momentum starts to dwindle off and starts to trade sideways. And yes, even though it's still holding above this short-term pivotal support level at 66.30 / 66.15, given the state of the situation in the euro dollar, I will flip to a neutrality stance for today as well for the Aussie dollar over here. So it may start to trade in a whipsaw sideways range for today between 116.30, between 0.6630, pardon me, / 0.6615. Upper limit will be at 0.6660. Okay, so all in all, turn to a neutrality stance for the Aussie dollar due to the technical weakness on the euro dollar. So neutral between 66.60, 66.30 / 66.15. Next up will be the dollar yen over here. So the dollar yen hit our support level at 154.40 yesterday during the US session, but then tumbled below 154.40 to hit the second support at 153.70. And what's interesting over here, it starts to shape a bullish divergence on the hourly RSI. So that also bear in mind that there could be some form of mean reversion rebound on the dollar yen. So both the dollar yen and the euro dollar technical chart in the short term are showing some form of intraday dollar recovery coming into play today. So that being said, I will flip to a intraday mean reversion rebound on the dollar yen for it to mean revert back close to the 20-day moving average that has acted as a stubborn resistance since 11th of December. So using 154.40 for sure, that is where the pin bar formed yesterday, the hourly pin bar at 9 a.m. Singapore time, and also confluence with the 5th of December swing low that previously saw a rally as well. So using 154.40 short-term pivotal support level on the dollar yen, flip to a intraday bullish bias for today for a potential minor mean reversion rebound. Two key resistance level to watch: 155.5, maximum 156.10, which confluence with the 20-day moving average. Only a bearish breakdown and the hourly close below 154.40 will invalidate today's intraday mean reversion rebound to see the continuation of the minor impulsive down move sequence to expose the next near-term support level at 153.70, 152.95, which is the minor swing low area of 5th of November and 7th of November. All right, so that sum up all the intraday technical outlook on the 4 major US dollar pair. Let us now proceed with the major stock indices, starting with the Asia Pacific region, which is the Hong Kong 33, representing the Hang Seng Index. So the Hong Kong 33 right now managed to stage a mild bounce, right exactly at our lower limit of that neutrality zone that we highlighted yesterday at 25,120, which is so the critical minor swing low of 21st of November. So no change. We do expect some form of minor sideways movement to continue. So still neutral between 25,120 and 25,445. Only a bullish breakout above 25,445 will negate this 3 days of bearish tone to see a potential minor rebound to retest the 20-day moving average that is confluencing with the next intermediate resistance level at 25,790. Above it may retest the 50-day moving average that is acting as the next key intermediate resistance at 26,010, 26,140. So this level is rather important. Why? Because since the bounce of the 21st of November low, it hit the 50-day moving average, and ever since it hit the 50-day moving average, acting as a stubborn resistance on 2nd of December, it can't face any bullish breakthrough of it, and price action continues to trade on the downwards trend ever since hitting the 50-day moving average and staging that bearish reaction of it on 2nd of December. And now the 50-day moving average is acting as a next intermediate resistance or confluencing it at 26,010, 26,140. So definitely a bearish breakout above 26,140 for hourly close above it will negate this ongoing we call it at least 2 weeks of bearish momentum or bearish trend that was seen since 2nd of December minor swing high over here. So that's for the Hong Kong 33. Next up will be the Japan 225, representing Nikkei 225. So Japan 225, yesterday we flipped to a bearish bias for it to dip down lower, and indeed it dipped down and almost hit our support level that we highlighted yesterday at 49,085. And this 49,085 also confluence with a key Fibo retracement level of that previous minor rally from the low of 21st of November minor low all the way up to the minor swing high of 12th of December. That confluence with the golden ratio at 61.8% as well. And what's interesting over here is that upon hitting our support level, the RSI has started to form a bullish divergence, as you could see over here, where price of the RSI showed a higher low, but the raw price action showed a lower low, indicating that the short-term bearish momentum has started to ease off. So this possible positive technical configuration that is emerging right now on the Japan 225, as we are speaking at 11:26 a.m. Singapore time, I will flip to a bullish bias for today using 49,085 as my short-term pivotal support level. First resistance level to watch, or I consider as an upside trigger level, will be a bunch of technical elements that are confluencing similarly to this level at 49,850, which is the 50-day, the 20-day moving average, and as well as this minor swing high of 16th of December and the former medium-term ascending channel support level drawn from the low of April this year. Okay, it was sometime. Okay, let me go back in time. Okay, April low, 7th of April low this year, 2025, now turns into a critical pullback resistance level. So if we start to see, one second, let me go back up. Yeah. So if we start to see a breakout above this key upside trigger level at 49,850, it could signify that that bearish breakdown yesterday was a failure bearish breakdown. So it's a bit of noise where the bulls could reinstate itself and expose the next near-term resistance level in first step at this 50,490 for the Japan 225, representing the Nikkei 225. Only a bearish breakdown and the hourly close below 49,085 will invalidate today's intraday recovery view to see the continuation of that bearish momentum, retesting the medium-term pivotal support level at 48,450, which is confluenced by the minor swing low of 18th of November and 25th of November. So that's for the Japan 225. All right. Next, we shall proceed with the Germany 30, that's representing the German DAX. So the Germany 30 also managed to hold within our neutrality range, the lower limit at 24,000 psychological level. We also confluence with the 50-day moving average. So no change, given that it's still being trapped within this neutrality range. So I'll still maintain a neutrality bias between 24,000 and 24,235. Only a bullish breakout above 24,235 and hourly close above it could flip the owners back to the potential bulls to seek out a next intermediate resistance level in first step at 24,395. So that's for the Germany 30. Next up will be the US Wall Street 30. So the US Wall Street 30 challenged our pivotal support area over here before staging a bounce, all right, over here. So what you could see now is that the US Wall Street 30 that is representing the Dow Jones Industrial Average managed to stage a bounce. So we will tolerate the excess for now over here to yesterday's minor swing low during the 3 a.m. Singapore time today at 47,985. So neutral between 48,000 and still maintaining that bullish bias using 48,125 / 47,985 over here. But two key resistance level to watch out for today will be yesterday's US session high at the start of the US session. Okay, which is at 48,780. We round up. 48,480. Okay, over here. Yesterday's US session high. Let me put it in writing. 48,460. Okay, a breakout above 48,460 potentially exposes the next intermediate resistance at 48,770 in the first step. So these are the two key resistance levels to watch out for today's US session, for a potential bounce back up towards this level using this pivotal support zone access 48,125 / 47,985. However, a breakdown below 47,985 will invalidate today's recovery scenario and see a further slide down towards 47,790, 47,560, which confluence with the rising 20-day moving average. So that's for the US Wall Street 30. Next up will be the S&P 500. So the S&P 500 managed to bounce off our pivotal support zone over here. Let me move this at 6,780, 6,760, which we highlighted yesterday, and also bounce out right exactly at the 50-day moving average. There's a bounce. And interestingly, this bounce flash out a bullish divergence condition on the hourly RSI, indicating that the downside momentum that was being seen at the start of this week, which is the past 2 days, has started to get ease off over here. So with that, still maintaining our recovery scenario for the SPX 500 using 6,780, 6,760 as my short-term pivotal support level for sure, given yesterday's bounce that coupled with the bullish divergence. First resistance level to watch will be yesterday's US session minor swing high area here at 6,840. All right, let's put it in writing. 6,840. Followed by 6,870. All right, for this potential recovery to take shape in the first step. However, a bearish breakdown below 6,760 will invalidate today's recovery scenario to see a further slide down towards 6,710, 6,660 next. That's for the SPX. Next up will be the weaker Nasdaq 100 that continues to trade below the 50-day and the 20-day moving average. So yesterday we do have a bearish bias. The bearish bias hit our first support level at 24,920 before staging a bounce. And it didn't come close to the second support level, which is at 24,760. So it printed an intraday low of 24,838 at 3 p.m. Singapore time yesterday, Tuesday, which is during the European session. All right. So what's interesting over here is that if we were to do the FIBO retracement taken from the previous impulsive up move from the low of 21st of November all the way up to the minor swing high of 11th of December, yesterday's minor low, where it managed to survive, confluence with the 50% FIBO retracement, which is a key, one of the key retracement level as well. And given the fact that the hourly RSI has started to shape a bullish breakout and a retest on its former parallel descending trendline resistance, broke out, retest it during 2 a.m., 1 a.m. Singapore time today before staging a bounce back up above the 50 level mark. All right, so indicating that the downside momentum has started to ease off in the first 2 days of this week, Monday and Tuesday. So given the fact that of this positive development in the hourly RSI and the Fibo retracement where it managed to bounce 50%, I would flip to a neutrality stance for today using yesterday's short-term pivotal resistance as my upper limit of the neutrality range, 25,160, 24,760. Only a bullish breakout at an hourly close above 25,160 will potentially see a minor recovery taking shape for the Nasdaq 100 to retest 25,380. Above it may seek out the stubborn intermediate resistance level at 25,760, 25,830 in the first step. So that's for the Nasdaq 100. All right, next up will be the commodities market, starting with the gold XAU/USD. So gold XAU/USD, no change as it continues to bounce off from our short-term pivotal support level at 4,267, 4,243 yesterday. All right, that's still a bounce. So what I could see that RSI is getting positive as it managed to stage a bullish breakout from a parallel descending trend line, and resistance now turns into a pullback support and now managed to hover above the 50 level mark and starts to print a higher low. All right, indicating that short-term momentum has started to creep back into the gold XAU/USD, supporting this ongoing bullish minor/medium-term bullish trend that has taken shape since the low of 28th of October this year. All right, so there's no damage of this trend phases. So with that, still using the medium-term pivotal support zone at 4,267, 4,243 to maintain my bullish bias. A breakout above 4,335, 4,355 over here, potentially see a retest at 4,380, all-time high that was printed in October in first step before taking up us potentially higher to the next resistance level defined by Fibo extension clustering zone at 4,430, 4,440, which is also confluence with the upper limit of this minor medium-term ascending channel, pardon me, that's drawn from the low of the 28th of October 2025. Only a bearish breakdown below 4,243 will invalidate our bullish bias view to kickstart a minor corrective decline towards 4,205, maximum 4,155, which confluence with the rising 20-day moving average, and 4,155 is the lower boundary of this medium-term ascending channel. All right, so that's for gold XAU/USD. So lastly will be the West Texas crude oil over here. So this is the daily chart of the West Texas crude oil where it's plummeted close to a 4-year low over here, almost retesting the 55.2023, 9 of April, broke below the low of 9 of April, which is 55.23, hit a low of 54.99, which is almost 55 figure level. So this level was last seen during February 2021. All right, 2021. So that is what, around a 4-year low. So what's interesting over here is that from a technical perspective, we know that price action don't go vertical down. So after a very steep fall, there could be signs of a mean reversion rebound. And indeed, the hourly chart is now showing this sign. So it hit our support level. So yesterday we have a support level at 55.23. We do highlight for that bearish bias view. And what we could see is that the hourly RSI has started to stage a bullish breakout for a parallel descending trend line resistance and now trading back above the 50 level mark, indicating that that downside momentum has been negated yesterday. Yesterday downside momentum has been negated. So with that, there could be a risk of a mean reversion rebound back towards the 20-day moving average. So we are taking things one step at a time. Flip to a bullish bias now for a potential mean reversion rebound using 55.23 as my short-term pivotal support level to watch, which is the yesterday's minor swing low and today's Asia session swing low as well. So first resistance zone will be 56.40, 56.78, which is the minor swing low area, former minor swing low area of 17th of October and 21st of October. A bullish breakout above 57.78 potentially take us higher towards 57.21 / 57.54, maximum 58.22, which confluence with the downward sloping 20-day moving average. Only a bearish breakdown below 55.23 will reinsert this bearish impulsive down move sequence to expose the next near-term support level at 54.50, followed by 53.46. So that's for West Texas oil. So before we go, let's have a quick look at the economic calendar. What are the key risk events that I mentioned earlier on? So today will be the Wednesday. So the key risk event will come at 3 p.m., starting 3 p.m. Singapore time, which is the core inflation rate for UK for the month of November. So market participants expecting at the same rate at 3.4%, still rather high above the Bank of England targeted rate of 2%. So the UK economy now is grappled with potential stagflation risk. Right, so that could influence the movement of the sterling sterling dollar, and and the sterling crosses, pardon me, excuse me. Then now we come to the much more important situation where we will start to see the slew of this ECB, the Fed Williams speech over here at 10:05 p.m. Singapore time. All right, Fed Williams speech, all right, at 10:05 p.m. Singapore time. Then followed by the EIA stockpile change at 11:30 p.m. Singapore time today. All right, so that could potentially influence the short-term movement of the West Texas crude oil over here. And thereafter, it will be a rather quiet session. So the key thing will come on Thursday over here. So Thursday, we have a slew of Bank of England interest rate decision. And as well as the ECB interest rate decision at 9:15 p.m. on Thursday. So interestingly, we'll talk more about that tomorrow. But what's interesting over here is that there is signs that the US dollar is now shaping a bounce after being very weak for the last 2 weeks. All right, so do take a look out of how the price movement of the US dollar unfold today. Ahead of this Bank of England interest rate decision and the ECB interest rate decision, not today, it's tomorrow, 18th of December at 8 p.m. and 9:15 p.m. Singapore time. Then we'll talk more about that tomorrow. So with that, that ends today's Daily Dose of Market Insights. I'm Kelvin here, signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.